Thank you all for sticking around through that commercial break. And now I turn the mics over to Ansel and CK for another episode of Fedwatch.
Q, thank you so much for the intro. Happy to be here. We're calling in from the Nashville Bitcoin Magazine studios and offices. Ansel, how you doing, my man?
I'm doing awesome. Great 4th of July for me and my family. I hope you guys all had a great 4th of July. Back to it at a new time this week, but we'll be back to Tuesdays next week. This is Fedwatch, the macro show for Bitcoiners. We got a big lineup today. So we're going to talk about commodities, the dollar, Credit Suisse news, BIS news. We have a Q&A section at the end where we solicited some questions from Twitter. So lots to get to. Christian, how are you doing, man?
I'm doing good. I mean, it's so exciting these days in the markets, in the world. Like, there's just so much happening, whether it's just chaos, whether it's war, whether it's protests. It really does feel like a fourth turning, if you will. And I mean, just seeing Bitcoin interact with all of this, it's fascinating, but also as someone who has a lot of skin in the Bitcoin game, a little scary as well.
Yeah, I keep waiting for a slow week where we can continue our series on like maybe some of the different institutions out there in global macro. We did the WEF. I would like to do the IMF and things like that. But man, every week we just have a jam-packed show. And next Tuesday, so coming up this Tuesday, we're going to have Joe Carlasari on. And it's going to be a great show. I can't wait. I'm excited because he has been saying we need to kill all the narratives in Bitcoin and come up with some new stuff. And I'm kind of right in that same boat. So that should be a really great show next week. Also, I did throw a bonus episode of Fedwatch out for podcast listeners. So check your podcast app. That is episode 101, where I went over fragmentation in Europe more in depth. Because when Christian asked that on the last live stream, I stumbled over my words. I didn't answer it correctly. So I wanted to research that and come out with a better episode. So I answered that more in depth. Check it out on your podcast app, Fedwatch Bitcoin, in any podcast app. So yeah.
Hey, before we get into it, we're going to be talking about what's happening globally. I will be remiss if I don't talk about what Bitcoin Magazine is doing globally, which is we're taking the Bitcoin conference and we're going to Europe. I think what we're seeing in Amsterdam, and we'll touch on this later in the show, is showing something that we've talked about a lot on this show, which is that Europe is unstable. And we've also seen that Europe, at least from a big government and central banking perspective, is pretty hostile against Bitcoin. So I think that there's a need, one, for Bitcoiners, and there's a very strong European Bitcoin contingent out there to, show the world that Bitcoin is important and Bitcoin is important to Europe's future. And then two, for us to continue to analyze what's happening in Europe, because as all of us know, Europe, for all recent history, has kind of been the heart of where conflict kind of breaks out, and I think that's true still today.
Yeah, great points. I think it ties into the last episode when I talked about fragmentation in Europe and how Bitcoin is going to make it easier for countries to leave the euro. Now, I wasn't talking at that time about the Netherlands. I was concentrating more like on Italy and stuff. But as countries leave the euro, which they eventually will, adopting Bitcoin will ease their transition to being more independent. So I think it's a nice tie in there.
So again, to all the audio listeners, you can see the slides that we're going to share as we continue the show on YouTube and Rumble and everywhere else that we post our videos. But let's jump into what's happening in Fed and U.S. news. And again, I think we're gonna start showing a nice array of charts here. So Ansel, back to you.
Yeah. So with the first few charts here, I wanted to highlight that unlike Europe, that is facing these really acute pressures right now, of course, with the protests and the energy prices, the U.S. doesn't really have any of these acute worries that we see over there in Europe. The biggest thing, I think, over the last 7 to 10 days has been a shift from inflation fears to recession fears. So if you got, Chris, can you bring up slide number 1 there? This is showing the GDP Now forecast from the Atlanta Fed. And this came out last week, and it kind of really wowed the market. It really shocked the market because it went all the way to -2%. This is annualized GDP for Q2. This would make the second quarter in a row of negative GDP, which is a technical recession. Of course, right when this came out, I saw a couple headlines saying, well, we need to revisit what we consider recession. Is it 2 years? Is it 3, 4? How are we going to redefine what a recession is? And I think that's funny, right? At first hearing that's funny, but also maybe we should, because we are ever since 2008, we are in a different global economic climate, with the great financial crisis and then Bitcoin coming along. Maybe we should revisit what we mean by recession, or are we in a depression? Let's talk about this. Let's have this discussion and see. But a lot of people go.
Well, what are your thoughts here? Just tell me, if you were to rethink these terms, ideas, concepts, what makes the most sense to you?
Well, I don't know. I mean, if you have a recession, 2 quarters of negative GDP growth, like 3 times in 6 years, and the other times you're only getting up to like 1 or 2% growth, to me, that sounds like a depression, right? It doesn't sound like there is really any recovery. It's just recession after recession. So Emil Kalinowski on Eurodollar University, he calls this the silent depression right now. And I like that. I think we probably should roll into calling this a depression.
So you're not saying revisit terms. You're saying, we need to snap out of this. Like, we have gone way past a recession, and this is now, a depth of a long depression that's playing out.
Yeah, but if we just start with the conversation about, hey, let's talk about what recession means and all this, I think you'll broaden that Overton window to start maybe talking about this is a depression instead of a recession. So I think that. Another thing that people were talking about with the recession fears is nominal versus real GDP. So for listeners out there, nominal is just measured in dollars. So if the prices go up, like CPI goes up, you would expect, an even GDP would actually be higher because, all prices are rising. And real GDP would be inflation adjusted or CPI adjusted. And right now, some people I've seen out there say, oh, well, we still have 6% nominal growth, right? Nominal growth when not adjusted for inflation, but it's 2% real GDP. So I think we're going to see some confusion or back and forth over those numbers. But in the grand scheme of things, right now, there is nothing acute like there is over there in Europe. So Europe is definitely kind of the center of global macro attention right now. Things coming up for the Fed, CPI next week on Wednesday. And we will be doing the live stream on Tuesday, so we won't be able to react to the CPI, but perhaps we can talk to Joe Carlesari a little bit about what he's seeing in CPI. And
maybe
then
we need to do a bonus show. I don't know.
Yeah, maybe we'll do a bonus show that week. And then FOMC is going to be meeting. That's the Fed Open Market Committee. They will be meeting on the 27th. Important about this meeting is they do not have a meeting in August. So it's going to be a 2-month break between July policy rate decision and September. Also, September is typically like the end of third quarter is when we see the most kind of stress in the system. And I don't know why. That's probably a holdover from old futures and old type of the way the economy was around harvest season and stuff like that, they had this cyclicality. Also, the federal government's fiscal year ends in the third quarter. And there's a lot of the economy has government contracts and stuff. So there's the end of the third quarter is where we do see a lot of stress build up in the system. So the FOMC doesn't have as many meetings leading up to that and possible pivot or whatever they're going to do. So I think that's important. And that's all I have before we jump into the charts. Should we jump into the charts now?
Yeah, no, let's go.
Okay, so going to slide 3, please, Chris, this is the dollar. And I think we were probably the only Bitcoin show that was talking about strong dollar for the last couple of years. And man, is it just ripping people's faces off right now. There's not much to glean from this chart other than the shape, in my opinion. And you can see it's just going parabolic. So we don't know where the top is, but I think that the top is getting closer in time because, parabolic moves end in a blow off top usually. And whether it's a blow off top or just a consolidation for the dollar, I don't know. But I do think that the time is getting closer that we do see a topping in the dollar. If you go to the next slide, Christian, just stop me whenever you want. This is I just took some Fibonacci stuff for the last two big bull markets in the dollar. Those are the ones that ended in the dot-com bubble, and then the one that started with the great financial crisis. And I know a lot of people don't like technical analysis and stuff, but Fibonacci is it's a series, it's a number series, and how it works, whether you think technical analysis works by self-fulfilling prophecy, or maybe it's part of our internal mammalian psyche of some sort. These things, it's uncanny the way that these two cycles worked out. So if you go from if you measure out with Fibonacci's the last two big bull markets, they both ended roughly around the 1618 line. And if you measure that out for this move, then it would take us to about 112 to 115 or so on the DXY, which I thought was interesting. And it's just at least a point for us to be watching out for, that could be a point where the dollar kind of reverses. A lot of people don't like the DXY because it is a narrow measure, mostly against the euro and the yen and the pound. So I included a chart on the next slide about the broad trade weighted dollar. This is 26 currencies weighted by how much the US trades with them. And I think it was last updated like 2018 or 19. And you can see this is also approaching a top. Other than coronavirus, I think this is the highest that this trade weighted dollar has ever been. So it's not just the DXY, it's also other measures of the dollar. If we go to the next chart, perhaps you don't like fiat to fiat comparisons. So I put gold in here, and you can see it really broke down out of the support that it was kind of holding for about a year. And it is right now 10% below its 2011 high. So holding it for 11, 12 years, and you're down 10% on that investment. That's I don't know. I don't know why people buy gold anymore, but this does show that it's not just the, fiat to fiat. It's also gold to fiat. And interesting, if you look at the euro to gold price, it is up year to date by 6%. So that fits right in with the dollar not being really inflationary, and that it's gold is sinking versus the dollar, but rising versus the euro. Next slide. This is the last currency slide that I have, and this is Bitcoin. And you can see we're kind of bottoming out here right around those 2011 highs, the previous cycle high, and it looks to be breaking out. So we'll see. I think Bitcoin might be some sort of early indicator for risk assets in general, because we do see possibly a bottoming in stocks, a bottoming in bonds, and things of that nature. So this could be showing that the worst for at least U.S. financial markets is over for the time being. Christian, lots of charts there. Throwing it back to you. What do you think?
Yeah, well, I want to say first and foremost, it's pretty clear that inflation is not exactly what people have made it out to be. And I think the fact that so many Bitcoiners have leaned against potentially incorrect narratives, it's going to hurt our reputation in the immediate term. And we're maybe even seeing a little bit of that, where people are like, oh, Bitcoin was an inflation hedge. Oh, this didn't happen. Oh, this didn't happen. The narratives were wrong. I know that Joe Colasari is going to come on to talk about that next week. But when you see the dollar doing what it's doing, and yet prices are still going up, there's a lot of reasons that can happen. And, we're having supply chain disruptions. Like, obviously, if supply chains are not as efficient, things are going to get more scarce and more expensive. And it's going to get harder to make things. things are very complicated to make, whether it's your car seat, whether it's a desk, whether it's a computer, whether, all these things that we take for granted are really complex to make and require sophisticated supply chains. So when those supply chains break down, when trade stops, that makes prices go up. And that really has nothing to do with quote unquote inflation. We are the only Bitcoin podcast, maybe not the only macro podcast, but one of the only Bitcoin podcasts that has been calling it out just like that the entire time. So I do want to call that out. So, I mean, Ansel, obviously you are the signal here. I just kind of ask the dumb questions and give my 2 cents. But why do you think we've been able to kind of look through the fog so effectively?
Yeah, well, I just think it's you have to have the proper premise, the proper assumptions that you base your macro forecasts on. And I think a lot of people have been saying that QE is inflationary and fiscal spending is inflationary and all this stuff. It's printing of money. Now, it does make prices go higher, but is it really printing of money? Since it wasn't printing of money, which has been my kind of my position, is high prices just lead to recession, right? Because high prices mean that you can't afford so much. And so you pull back on your demand and that crashes the markets. So if you thought that QE and fiscal spending were inflationary, you got this wrong. That's my opinion. But you did come up. I wrote a few things down when you were talking there. Is the markets? Yeah, they have inertia, so they can go on a little bit longer than you would expect in a certain direction because prices go up for many different reasons. So there's inertia. There's also undershooting and overshooting of certain things. But in the grand scheme of things, they will return to the mean of whatever the true macro situation is. So, yeah, those are my comments there.
I do want to say that outside of just looking at DYDX gold, some of these other indicators, with doing Bitcoin Amsterdam, we are selling tickets, we are pricing sponsorships in euros, and we're almost 1-to-1 with the dollar. So it's really easy for us to do the math on that when we're doing our accounting. And as far as I've known, the euro has always been like $1.20, $1.30. At one point, it was almost worth $2. So pretty astonishing seeing the currencies trade at parity when historically the euro has been more expensive than dollars just directly in exchange.
Yeah, I think that's a psychological level too with the market. If the euro can't hold parity and it drops to say 99 cents, oh man, it could be an avalanche after that. But then I think it will overshoot and it will have to come back to the general trend, which is weaker euro, but not that fast. It's not going to drop overnight. It's going to take a couple years probably for it to, move 25%. And it shouldn't move 25% in a week. That would be a major overshoot. But let's move on to some of the other charts here. Can we do that? I just want to
Let's do it.
Keep on task here. So slide number 8 is we're getting into commodities here, and this is cotton futures. There's been a lot of talk recently about cotton because it did break down when people weren't really expecting it. It just kind of fell out of bed, and it's down over 40% now. What I thought was interesting, though, about cotton, if you go to the next chart, is a zoomed out monthly chart. And you can see there's a very high similarity between the Great Financial Crisis price action and recent price action. So you had a big sell-off at the acute phase of the recession or the financial crisis, then a big rebound, and then a sell-off. And that's exactly what we're seeing again here. And I think this demonstrates really well my kind of theory is that we're just going to return to normal. These were just temporary shifts in the market, and we're going to return to low growth, low inflation. Let's keep going. Slide 10 is wheat futures, and wheat has returned to pretty much the levels where the Russia invasion started. A lot of people were worried about this. I was worried about wheat, the price of wheat and the price of fertilizer and all that stuff. But as it turns out, it looks like Russia is going to have a record wheat harvest this year. They also are able to export some of that stuff, wheat from the occupied areas in Ukraine, which is kind of causing some political turmoil right now. But, you want to see that wheat get out to feed people around the world. So there is a lot of pressure that has been relieved in wheat. It's just returning to normal. Next slide is corn futures. This fell out of bed, very similar to cotton. And a lot of people that I listened to in the macro space, they were going heavy long on corn. They thought this was the next thing because with oil prices going up, there would be more demand for ethanol. Also with the just inflation that's people were talking about, then, they thought corn futures were going to go up. But it looks like it had a nice little head and shoulders and just fell out of bed just like cotton did. Next slide is now we're getting into some of the metals. This is copper. And we did get a question about this on Twitter when I solicited questions for this episode. So I'll just cover this here. Copper is called Dr. Copper because it has a PhD in macroeconomics, they say. Most modern things in the world have copper wiring, copper plumbing, things like that. So it is a modern metal. And if it turns over, then most likely we're going into recession of some sort. The demand for copper is falling. So if the demand for copper, one of the base metals in our modern world, then that means that demand in general is falling. You can also zoom out on the next slide and you can see I did the same thing as I did with the cotton futures, and that is just zoomed out to show the great financial crisis. And we had a big dip right in the acute phase of the great financial crisis, a big run up, and then many years of return to normal sell-off. I think we're just going to see pretty much the exact same thing this time. Next slide is aluminum futures. And that is, I think this is just a fantastic chart to show like technical analysis for a lot of people that don't like technical analysis. I mean, we had a beautiful long-legged doji at the top, and it came down right now. It's sitting right on the highs from January 2019. Just a really beautiful chart, in my opinion, and does show that, it's kind of just this cycle. Everywhere you look, you see the Corona crash, big run up, and now you see a sell-off at the end. Next slide is oil. And oil is, you have to make sure you're looking at a daily chart of oil. If you look at a weekly chart, you won't see the closes of these candles back in March. But yeah, the high was back on March 8th. And we actually had Luke Groman on the show at that time, that exact day. And we were talking about oil. So that was very interesting. We got to see what our calls were at the top. But oil tried to regain a new high, but couldn't quite do that. And if you go to the next slide, these are just my technical analysis lines that I've been following. So we had this kind of, I don't know if you call it a flag or a channel, and then a ascending wedge in there. And when it started falling out of that wedge, I was like, okay, well, it's definitely going to the bottom of the channel and it's probably going lower. And now we see it testing the bottom of the channel back, from April. So very interesting what's going on with oil. I don't know if this is going to continue selling off, but I do think over the next 2 to 5 years, we're going to see lower oil. Any higher high in oil is just going to be temporary because demand is going to fall faster than supply. And
Ansel, so oil prices going down at the pump?
Yes. I mean, I've seen it go down about 10% or so just in my local area over the last couple weeks. That's not going to show up in CPI though, because, I think it's mainly at the end of June, very beginning of July. Even with the travel weekend, I saw multiple places where 2 weeks ago it was 479 by where I'm at in Florida, and it was down to about 440. So that's a pretty significant move in gasoline prices. And I do expect that to continue because there's just not as much demand to push, relative to supply. So in a recession, we're going to see falling demand and falling prices. That's I don't know why people.
Uh-oh. Do we lose Ansel? Looks like it. I mean, I think Ansel's completely right, though. Demand has been destroyed, hence we are in a recession. And then obviously that is an opposing effect against the supply chain destruction that is occurring. So seems pretty straightforward to me. Q, what do you wanna jump in with?
No, I just wanted to, you know, the supply chain issue is just going to continue to get, I think, exacerbated and blamed for some time. Time will tell. Time will tell.
So what do you do? What's practical to do? Let's say, the viewers are listening, they're trying to hodl Bitcoin, their dollars are going up on the chart, but everything is still getting more expensive. Like, do people start hoarding like supplies? Like, I guess, what is a person to do? What are you thinking about?
I mean, like I actually joked about this over the weekend with some friends, but we got sriracha at a dinner table. And I brought up that sriracha manufacturers have said like there's probably going to be a shortage in the near future just because we don't have as many of the raw materials we need to create sriracha. No, I'm not saying everyone go hoard your wealth in sriracha, but like if you like sriracha, maybe buy a couple extra bottles the
You
next
want
time
to
you
hear
go to the
something
grocery.
funny?
Yes.
So I've been looking for sriracha at grocery stores, and they only have the knockoff ones at this point. So I just went on Amazon. I bought 2 giant big ones. Just was like, hey, this is at least 12 months supply of sriracha. So hold me over.
There you go. Like it's happening in real time. I mean, I will always hold it against my dad that we did. The room I am in right now is my brother's room. And I will always hold it against him that the day oil was negative, I called him and said, like, how do we just get paid to hoard barrels of oil in this bedroom? Like, I think there was at least 1, 2, 3, 4, 5, 6. We could fit at least 7 barrels of oil here. Just what that, but how do you prepare?
I
Like,
mean, what a barrel is like? How much is a barrel of oil these days? It's like $150 a barrel. I don't
it's
know.
actually, I believe, if I'm not mistaken,
I
as
guess
of
that's
yesterday,
crude.
it was crude oil came in at less than $100 a barrel.
Okay.
I've been avoiding your question because the truth is, like, it sucks to say it, but in this moment in time for a small sliver, cash is king. I'm not stopping my DCAing. I'm not stopping stacking, but cash is king for the short and immediate term. Ansel, welcome back.
Hey guys, sorry about that. Internet's spotty, I guess.
So Ansel, you were talking about how supply chain destruction brings down, or sorry, not supply chain destruction, but a recession brings down demand across the board, and then that has almost like an antithetical effect to the tightening up that's happened because of supply chain destruction and the loss of efficiency there.
Right. Yeah. Recessions just cause a pullback in demand. We saw this kind of, remember a couple months ago, everyone was saying, oh, we're going to have to ration diesel on the East Coast. You haven't heard anything about that for the last 2 months, because guess what? Markets work. If prices go up, that craters demand. Price goes up, demand goes down, and we have a return to normal. So that is just
Well, the
what we
funny
should
thing is, like,
expect.
I feel like today people don't like. There's a lot of people are maybe even the main zeitgeist around like how the world works is like the base assumption that markets don't work that well.
Yeah. Right. Market failure. There's no such thing as a market failure. That's what central planners want you to do. They or want you to believe that the market can't take care of itself. It's not a self-balancing system. They need to balance it for you. Right. But the market is self-balancing, even with their interventions. I mean, their interventions will cause problems. It'll cause maybe things to get dislocated more than they otherwise would. But eventually the markets will correct for the government intervention too. It might take a little bit longer. So um, I don't know why free market people lost sight of that, but I mean, that's common sense for economics, in my opinion.
No, I mean, it makes sense to me as well. But we do not have to dwell on this. We have a lot of other topics we need to jam on. So Ansel, what is next?
Well, can I continue going on the charts? I'll just go through these fast because I think they're pretty important, especially
do it.
when we're talking about Europe here coming soon. And that is slide 17 is the European natural gas futures. The blue line is the front month contract, and the red line is July 2023. So a 1 year forward from today's date. As you can see, obviously the front month is more volatile, but I think where people are kind of shitting their pants right now in Europe is that red line. It has just taken off very recently, and that is saying that the market is expecting energy costs to be extremely high in Europe for over a year. So that's a worrisome from a business perspective. It's worrisome from an investment perspective, even a government perspective, a people perspective. That's very worrisome. And I think this recent kind of vertical line in the red chart is really worrisome for people. That's my last energy chart. Any comments on that one, Christian?
Man, energy going up means everything goes up in terms of price, in terms of burden, in terms of difficulty to make. So it's like a tax on Europe. I mean, we saw that in Europe, they redefined their energy mix to include nuclear as well as, I don't know exactly how wide spanning the redefinition of oil or carbon-based fuels, fossil fuels. It gets redefined as green in their new definitions, but they're scrambling to maintain the narrative while putting themselves in a more sustainable position. But right now, Europe is not looking good. They went deep on this, ESG driven path, and they're effectively getting crushed by the first lick back. They have no answers to reality kind of instilling consequences on their actions.
Yeah, and if you look at the U.S. natural gas futures, the Henry Hub futures, which I don't have a chart of, unfortunately, is it's coming back down. I mean, it's not even near historic highs for U.S. natural gas futures. So, Europe is going to have different inflationary pressures, quote unquote inflationary pressures, than the U.S. is going to have. And that's very important when you are trying to predict what's going to be coming for the euro. But let's get into real quick. I just have a couple more on the supply chain. So number 18 here is the Baltic Dry Index. And this is just a weekly chart. It's showing, it topped way back towards the end of 2021 and has been down ever since. Even the Russia invasion stuff didn't really affect these bulk dry goods. So that's steel, grains, anything that doesn't ship in a 40-foot container would be kind of included with this Baltic Dry Index, and things are down. If you zoom this chart out, by the way, the Great Financial Crisis is like double this peak. So, I mean, it's not even close to how bad it was back then. And then my last shipping slide here is the next one, and this is the Freightos Index, which we've talked about here on the show before. And this is just showing that even last week, once again, we had an acceleration in the decline of shipping costs or 40-foot container prices from China to the U.S. So, supply chains are righting themselves because demand is crashing. So prices will come back in line with the norm. And that's all I have for this section, Christian.
I got nothing to add. Should we just continue?
All right. So let's, what about Credit Suisse? This was kind of something that Dylan LeClaire brought to my attention on Twitter, and he was going to be writing a blog post or a newsletter post for the Bitcoin Magazine Pro. I don't know if that has come out yet, but this was very interesting chart from Dylan showing the credit default swaps for Credit Suisse, big bank over there in Europe. And this is their default risk. So as this goes up, it means that there's more risk of the bank defaulting on their loans. Credit Suisse has been embroiled with scandal over the last couple of years. Last year they had this Archegos thing. I don't remember the specifics of that, but it was a pretty big deal, multi tens of billions of dollars in some scandal. Then they posted a loss in 2021 of 2.2 billion. Just earlier this year, they were embroiled in a $90 billion scandal of, funding drug dealers and sex child trafficking rings and things like that. So there's a very big ethics scandal from Credit Suisse earlier this year. They also had 1.7 billion exposure to Russia, which was, I think, the biggest in Europe. So their credit default swaps are blowing up. But I thought it was interesting because then someone replied to this. And if you go to the next slide, all the banks, their credit default swaps are rising. So this shows that there is definitely some stress in the global financial system. If you want to say we're not entering recession, like Powell is trying to say up there in front of Congress, that recession is not his base case. I mean, just look at any of the charts that we just produced right here, and demand is falling, stress in the system is increasing, and recession is definitely here. So that's what I have here, Christian. What you got?
And you think even depression is here, not just recession. This is one of multiple recessions back to back to back.
Yeah, well, like I was saying, return to normal. I think normal right now is just a depression, low growth, low inflation. Now, people might say, hey, well, that's not good for Bitcoin. How does Bitcoin succeed in that environment, right? But Bitcoin has succeeded in the environment since the great financial crisis just fine. And so Bitcoin's kind of, the way Bitcoin works is that it works in deflation and inflation, just like all sound money does. And as low growth and low inflation wrecks the world, then Bitcoin offers green shoots. Bitcoin offers a different way. It offers a way for people to get control back from maybe the globalists or the people that they don't want in charge anymore of the global economy. They can take that power back with Bitcoin. So that would be my answer to people that don't think Bitcoin will do well in a depression. I think, why not? Of course it will.
Speaking of Bitcoin and speaking of Europe, or I guess we're going to be talking about Europe in a second, the BIS, in a interesting move, creates room for banks to hold Bitcoin on their balance sheet. Ansel, do you want to go into the details on this news?
Yeah, this will be real quick. It's kind of, the bottom line here is that they made it so that you could hold up to 1% Bitcoin on a bank's balance sheet. Pretty simple news, but a lot of people took this as super positive, and a few people took it as maybe not so positive. So I think there's kind of a positive or negative way to take this. So yes, the BIS has now said that Bitcoin has a place on banks' balance sheets, and that is huge news. But it also said that you can't have more than 1% because it's too damn risky. So that is kind of a positive and a negative to this story. And I just wanted to put my 2 cents on that. Did you see this headline, and what was your reaction?
I did see the headline. I thought it was interesting, and I honestly think that central bankers, governments right now, they're kind of in this position, this weird quagmire that a lot of corporations found themselves in 2016, 2017, 2018, where they're saying Bitcoin is not the signal, it's blockchain. Now they're saying Bitcoin is not the signal, it's CBDCs, but they're also inherently almost saying that there is something here, right? It's difficult to say that, hey, this thing that was created by Bitcoin blockchain, it is not the signal, and also say that, hey, this thing that was created by Bitcoin digital currency is not the signal, but look at my version of that. I have a better one. So I think that they're in this quagmire, and it's pushing them closer and closer into like looking into Bitcoin itself and seeing that even as they oppose it outwardly, there are still benefits for them also getting into the adoption game too. So it's really interesting. We saw it happen with corporations. They're saying no, Bitcoin's not it, it's blockchain, and now corporations have Bitcoin treasury strategies and conferences about that, and it's a meme that's growing. And I think that that's going to be the same with commercial banks, state-run banks, even central banks very soon.
Absolutely. I don't have much to add to that other than, the government they've been looking for a reason to ban Bitcoin for a long time, and you couldn't do it because if you ban Bitcoin, you kind of acknowledge that it's a threat, right? So you actually give it a vote of confidence if you ban it. But now these DeFi folks, these NFT folks, and all these Ponzi scheme promoters out there, they have given the governments a reason to clamp down, and so maybe they'll use it. But there are bright signs out there on the horizon as well, like this the Biden executive order to request comment on Bitcoin and CBDCs and things. Bitcoin Policy Institute put in some comments, and
Our
it was
boys
awesome.
at the Bitcoin
It was
Policy
awesome.
Institute. Great
Yeah.
squad there.
Yeah, that's Matthew Pines over there, right?
Matthew Pines is one of the fellows. It's actually David Zell and Grant. Grant McCarty. They're both Nashville based. Hang out with them. Actually saw David Zell earlier today, and they've been absolutely crushing it. And yeah, they're a group of fellows. I think they have 10 plus fellows, including Matthew Pines. Absolutely fantastic, and they're doing what no other policy group has been able to muster up thus far. They've all, confused Bitcoin with other things, and finally someone is doing a good job. So cheers to them. Cheers to them.
Absolutely. And it's just, we need voices like that in this discussion when they try to demonize Bitcoin or lump Bitcoin in with these things, as the regulators will come. We need those voices. That's all
Ansel,
I had on
can
the
you talk about what you
BIS.
liked about that? I think we should talk about the report they did. Can you talk about what you liked about that report and, how it's different, a breath of fresh air, if you will?
Yeah, let me bring up some commentaries that I wrote for my I wrote this for my community over there. I have that new Telegram channel, so I wrote this out. Yeah, I think that the executive order will create a huge learning opportunity for many people. Most people were negative on it at first, right? They didn't like that this seemed like regulation or that the regulation was coming. But it probably will turn out positively if we have people like the Bitcoin Policy Institute writing these things. In there, they talked about the benefits of mining, how they think it's actually going to help renewables. They talked about pretty much all the arguments that we've made over the years about Bitcoin. It's but in a professional way. This is a very detailed argument that they laid out, just like Matthew Pines when we interviewed him about his national Bitcoin and strategic interests of the U.S. That article that he wrote there, it was pretty much all the arguments that we've made in Bitcoin over the last 8-10 years, but presented in a very professional manner. And that is exactly what the Bitcoin Policy Institute did here in response to the executive order.
No, yeah, I mean, again, huge fans and big shout out to them. I think more is coming from them, so keep an eye out. Make sure to go follow them on Twitter and go check out btcpolicy.org. Check out that report and all the other reports they put out there. Really putting a great step and a great foot forward for Bitcoin in terms of answering policymakers' questions and hopefully helping minimize the friction that comes from policymakers. I know we are rubbing up against time and we have a little bit more to talk about, especially regarding Europe.
Yeah, we can cover the recent protests if you want to. The stuff going on in Netherlands with the farmer protests looks to be spreading now to Poland and Italy. I mean, it's absolutely shutting down the Dutch economy. Almost like 100% of the economy is being shut down. It's pretty incredible to see. And this could lead to more fragmentation pressures in Europe, which I did talk about on the last episode of Fedwatch. So that's all I have for this. I didn't have any specifics. Do you want to give this one some color?
Yeah, I mean, it's difficult to get a good understanding of what's happening on the ground. One, there's a lot of bad information. Two, there's a lot of exaggerating what's actually happening. And then three, it's just not being covered by many. There's very light coverage, similar to what we've been seeing or what we saw with Canada, except that the people on the ground are making a whole lot more noise then. But generally speaking, I'm dealing with a lot of Dutch people because we're putting on Bitcoin Amsterdam, and it seems like people are actually pretty divided about this in the Netherlands, and it does seem like some of the images of an empty grocery store are a little bit overblown. But with that being said, like as time passes, this will continue to have a greater effect. In Canada, when they started blockading and things like that, it had a huge effect, and the effect was so big that Trudeau had to respond with force. So it's going to be very interesting to see things playing out. And we're seeing other European nations where farmers and other productive producers are getting hit with, very onerous regulations, starting to stand up and do the same thing as well. So it's very interesting to see, people who have heavy equipment using them to protest, and how there is power and scale in doing that in a nonviolent way, and seeing that movement kind of spread, especially again in Europe, a place that we've been calling out as a powder keg for a while.
Yeah, and I also heard that Canada, they're trying to do the same sort of agriculture regulations over in Canada, and that could spark another Canadian Freedom Day, or whatever they called it, Freedom Convoy. That would be interesting if it came back to Canada and spread around Europe. That'd be pretty crazy.
Wow, it is crazy just seeing all of this play out. Again, it's scary, it's exciting. I hope that the fallout kind of brings us back to a better path for the world. But it's scary to try to make it through that.
Yeah, I do have one more here comment that I did write in the outline that I forgot I put in here, is that some people say that the government instability affects risks, and that will affect the economy, going forward. That the let's see, government instability. So it is the central planners, the instability of the central planners, and the central planners not being on the same page and not showing enough unity and enough forthrightness to get the job done at the government level is what actually brings risk to the markets. And that's, I think, shown over there in Europe right now. But in fact, it's the other way around, that the economies crashing bring the instability to the political sphere. So like I was trying to tie this into what you were asked earlier about, I don't know, I was saying something earlier, now I can't remember what it was. About central planning and about the balancing of the markets, and how there is no market failure here. Well, these people, the globalists over there in Europe that are doing these the agricultural policies and stuff, they are thinking that it's a failure of government that's causing a recession, when really it's the recession that's causing the failure in government. So they always have it flipped around, and they put the central planner at the center, instead of the central planner is always, a result. The failure of central planning is always the result of the economy. So I don't know if I tied those things together.
Wow. That's profound, Ansel. You're effectively saying that, from an economic perspective, the majority of economists are in the equivalent of the flat earth paradigm, where, the central planner, the central bank is at the center of it. Even like the legend and lore and the myth of the Fed is in that paradigm. But the reality is that there's actually a sun, quote unquote, the free market, and we're all orbiting around it. And maybe that's the more true paradigm. I don't know if that makes sense to the listeners, or if I went off the deep end on that one. But Ansel, I know we have some questions that you solicited, Q&A on Twitter. We can jump into that, and then maybe we can riff on Bitcoin price. I mean, obviously we went over a chart earlier, but price is in a dubious position still here at 20K. Yep. Who knows if we can go up? There's a lot of negatives that come with long consolidation, as well as potential positives with the price.
Yeah. So do you have the Twitter questions pulled up? You want to fire away?
Yeah, let's do it. So you picked out about 5 questions from Twitter, so I'm just going to hit on them. Question number 1 is from Nick Coletta, can you explain the importance of the 10 and 2 in pleb terms?
Okay, so the 10 and 2, he's talking about the yield curve, and you probably hear that from a lot of macro people. That is just the interest rate on the 2-year treasury versus the interest rate on the 10-year treasury. And when the 2-year treasury goes above the 10-year treasury, it doesn't make sense, right? Why would it cost more to borrow money for a shorter period of time than a longer period of time? And so it tells you when that thing happens, when the 2 goes above the 10, that tells you that something is wrong. The market is telling you something is wrong. And that's generally always been in front of a recession. I think it's something like 6 to 18 months from the time of the inversion like that we have recession. So that's just the importance of the yield curve. It tells you that the market participants and the treasury market is the largest, most sophisticated market in the world. It's telling you that something's wrong. So that's the importance of the yield curve.
All right. Next question. What is the Fed's role in a post-Bitcoin adoption America?
Okay. It will be similar to the role of the Fed on the gold standard. I mean, they don't really have a role today, like we say on the show, that they are followers. Their main job is influence. They're influencing the market through the Fed mythology, and that they print money and all this stuff, but they inevitably follow what the market is doing. So what will their influence be after Bitcoin adoption? The actual influence will be the same, which is very little, but their role will probably look a lot like the gold standard. If eventually maybe the Fed will go away, which would be great, but at the beginning, it'll probably just look a lot like the gold standard. They'll be less important in our daily lives and in the financial press.
Ansel, this is not from Twitter. This is actually a live question from YouTube.
Okay.
Is Jimmy Song joining Fedwatch someday? I don't know. Do you want to invite Jimmy Song on?
We should. I've talked to him in the past back on World Crypto Network days. So, yeah, that would be great to have him on. Yeah, for sure.
All right. Well, Ansel, I'll leave it up to you to put out an invite to Jimmy Song. Jimmy's on Bitcoin Magazine Live a lot. I think he came on almost every Friday for several weeks in a row. So we got lots of Jimmy Song here at Bitcoin Magazine. Let's get back to the Twitter questions. I know we have a couple more here, and then we can hit on some riffing on Bitcoin price before we close it out. Okay, some hopium. Give the folks some hopium around why it is the way that oh my gosh, I am totally blowing this. But let's talk about the WF. Let's talk about globalists. Give the people some hopium why they will fail.
Yeah, well, I see the globalists failing all over the place. I'm not as maybe aggressive in my rhetoric as Tom Luongo, the great Tom Luongo, but I see things very similarly, that the globalists are, every step they take forward, they get one step back. I also see, every step forward they take 2 steps back. And I also see that they are acting very defensively recently. So a lot of their policies, a lot of their things like this fragmentation, and Christine Lagarde talking about, we're going to make a new monetary policy tool that is going to solve everybody's worries about the euro. It's defense. They're playing defense instead of offense. And so I see that happening a lot with globalists. And yeah, I think that they will just inevitably lose out to the rise of populism.
All right. So what do you mean by deflationary environment? What is like the monetary perspective around this? Can you expand a little bit about describing what you mean about a deflationary environment?
Okay. So deflationary environment, that you can't escape the end of a credit cycle. The end of a credit cycle is deflation. That credit disappears. It gets defaulted on, and money supply shrinks. Even Mises said you can't escape the end of a credit cycle, right? And so that is what we have here. We just have one big global credit cycle that's lasted, in my opinion, Ray Dalio says for the last 80 years, and I think it's about that, maybe 60 years or something in that neighborhood, where the this global credit bubble has been building, and now we're deflating this global credit bubble. They can kick the can down the road, right? They can do QE, which is just balance sheet manipulation. It's not really printing money. It's just manipulating the bank's balance sheets, hoping that they will print money in the process of making loans. But you can't get rid of this debt problem. You can't get out of a debt problem by adding more debt. So the end of this is deflationary, and that is the pressure. The pressure is in the deflationary direction. That's why all these crises are not like hyperinflationary crises, at least in the United States in the dollar. All the crises are flash crashes, where the credit markets freeze and there's a possibility that everything crashes to zero. That's a deflationary environment that we're in, and they try to kick the can down the road, but they will never be able to escape the ultimate end, which is not inflation, is deflation.
Bum, bum, bum. All right. Is the strong, we have 3 more minutes here. Is the strong dollar transitory? How does copper play a role in macro? What are the power dynamics in international trade now that China is opening up its ports and flooding the world with inventory? Is any of this deflationary? Ansel, a lot of questions here.
Yeah.
You got
we
2
covered
minutes.
some of those.
Go.
We
did cover some of this.
Yeah, we covered some of those with the copper. And the dollar, I think the dollar will continue to strengthen, but it won't be a straight line, obviously. I think we'll see a stair step upwards, kind of what we've seen since the great financial crisis. That what's been happening in the first 10 years after the great financial crisis is what we're going to return back to. Now, as far as China goes and reopening their ports, a lot of that traffic actually did get rerouted to other ports in China away from Shanghai when they had their whole lockdowns. So the backup is not as bad as what we at first thought. The U.S. customer or the U.S. purchasing manager or whatever you want to call them, they're just making fewer orders from China right now too. So even if they do, completely open up over there in China, it won't be a flood of new orders to the U.S. So overall, I think it is a symptom of deflation and not necessarily a cause.
All right, Ansel, we're at time. Let's just have one last word about Bitcoin price.
Yeah.
Things are ripping right now. I think we just passed 21,000, but
oh, nice.
I'll see. It seems like miners are selling the rip, if you will, and if that trend continues, I think that the bear market continues. But as soon as sentiment changes and people are not willing to sell the rip, and actually the rip causes FOMO, then I think we can reevaluate. But with that, you can follow me at CK_Snarks on Twitter. This is Fedwatch. We drop episodes at least once a week. If not, Ansel will drop in a couple more. Check us out on Fedwatch on your favorite podcast player. Visit us on YouTube. We're also there, and on Rumble. Ansel, where can people find more about you?
On Twitter, bitcoinandmarkets.com is my website. I have a Discord community and a Telegram channel. Doing my own podcast over there as well still. So lots of stuff going on. Oh, and a free Friday newsletter. So sign up on bitcoinandmarkets.com.
Ansel is my favorite, so that's why we do this podcast. I've been listening to his stuff forever, and now I'm honored to be his co-host for Fedwatch. Q, thank you for having us. What's next?
Thank you for joining us, guys. We'll be having Jimmy Song join us in just a moment, but if you can't get over CK's voice and want to hear more of it, hop on over to Twitter at about 2 p.m. Pacific time, 5 p.m. Eastern, and any and all of your questions about Bitcoin Amsterdam will be answered there. And as a gentle, subtle reminder, go buy your tickets to Bitcoin Amsterdam. So you know the drill. Myself, Chris, can't have our jobs if you don't buy the ticket to Bitcoin Amsterdam. That's kind of how this whole shtick works. So buy those tickets. And then we'll be joined by Jimmy Song in just a moment.
Bang, bang.